All right, welcome back to Two Stupid Guys Trade Stocks. I'm Vinny.
I'm Dylan.
And today we're going to talk about a stock that was requested by a viewer here, JD.com, one of the competitors to Alibaba. Alibaba, well, one of our other videos there. An interesting company. I actually put some money in Alibaba, but I was remiss in not taking a look at JD.com before I did that. And we're going to talk about JD today, see whether or not it's worth an investment.
It has been on a tear for like a year straight.
Yeah. I mean, very interesting, right? Like, there's a lot of interesting economic trends going on in China with like their growing middle class. I want to say over the next, I think it was 5 years or 10 years. I think it's 5 years. There's over 400 million people in China that are expected to reach like middle class status. So e-commerce is booming there. The only country that was going to predict it to beat them was India.
Yeah.
But yeah, very, very, very fascinating. So, as you were kind of saying, they've been on a tear last year, but they've had a recent kind of fall off here with all the other Chinese tech stocks that have had a sell off, amongst rumors of delisting in the US for the ADS, and then some real kind of negative publicity, whether or not the either Chinese or American government would negatively impact their business. Just today, actually, as Dylan and I are filming this, there was a $2.8 billion fine announced by the Chinese government against Alibaba, who's JD's largest competitor. So there's certainly an anti-Chinese tech kind of sentiment in the market right now, based on geopolitical kind of trends. But that doesn't mean it's not a bad investment.
No, Baba, JD, I think Pinduoduo and Baidu are all like real attractive.
Yeah, exactly. So this brief snapshot here from FinViz, if you good website for like kind of financials. So basically, JD is a little bit tough because they had a pretty down year in 2018. So some of their numbers are a little bit. I don't know, a little questionable. This 574% earnings per share growth, that's not sustainable. That was a one-off thing. The nice thing about it is that they are still growing both top line and bottom line revenue now since like 2018. In terms of their sales growth, you're looking at somewhere in like the 20-30% kind of growth territory. As long as they can continue to grow bottom line, at least in line with that, I think that's
great.
Very solid growth numbers there. You're actually going to see a little bit of market expansion in terms of market. In terms of their profit margin. We're going to talk about that in here in a second from one of their financial presentation slides. So it's interesting, despite the fact that there's this overwhelmingly negative market sentiment regarding Chinese tech stocks, this is what you see as far as like their analyst ratings right now. Overall, very bullish.
Everyone wants to buy, huh?
Yeah. I mean, it's an interesting play, especially when like Dylan and I were talking about the some of the owners of JD.com being Tencent, and then Walmart is actually a large owner of JD.com. Yeah,
they work with Baidu as well.
Yeah, very interesting. So this is from their most recent presentation for investors. You're looking at a pretty dramatic, growth here in terms of revenue. These are all in renminbi, which is the Chinese yuan currency. But very bullish as far as like their growth here. You're following this trend of an increasing quality of life for the average Chinese citizen. So pretty solid market there, pretty profound growth. Very, very impressive to see something like this year over year.
Those are pretty stair steppers.
Yeah, they sure are. Yeah, I know, right? And then this is kind of what I was talking about before. If you actually notice here, if you're looking at the gross profit margin, you're seeing a little bit of expansion over time. So as businesses tend to scale, their profitability tends to go up, right? Because you don't need, say, once you have the infrastructure down as far as like the number of distribution centers and servers, that sort of stuff, you're not having to continue increasing that to the same degree anymore. Initially, it's a larger portion of your expense, but so we're seeing some nice market expansion as far as their gross profit margins. And then the cash flow is kind of mirroring that. 2018 was a weird year for them. They had a lot of expenses as far as their infrastructure, but we're going to talk about that in 1 second because I think that's actually one of my favorite things about JD.com is their infrastructure. So, but otherwise, pretty solid growth as far as their cash flow. As shareholders, ultimately, what are we buying? We're buying the cash flow the business generates.
They made a lot in 2020.
Yeah, well, a lot of lockdowns. JD actually had a little publicity stunt related to coronavirus, which I thought was pretty funny. The publicity stunt was. So, where did all that money go? Like in 2018, where are they spending all this money? They're actually building out one of the largest logistics networks in the world, basically, as far as yeah, exactly. So their vast majority of their products are able to be delivered within, I would say, 48 hours. They're doing a 24 to 48 hour kind of delivery window, much like Amazon is doing in the United States with Prime. And the reason why I love that is because, it kind of, Dylan and I were talking about like a little bit of psychological feedback loops. And it is important to create this psychological feedback loop. That's what Amazon has done with Prime. And that is what JD is doing with their logistics network. Is once you make the purchase and then get the item, it encourages you to make the purchase and make another purchase and get another item, make another purchase, get another item. They keep you on this little, kind of flywheel. That's what Jeff Bezos loves to call it, where it increases the profits. Every time it goes by, not only are you growing a number of users, you're getting the users that you do have more and more dependent upon you.
Yep.
Yeah, exactly. And so you're getting a larger and larger portion of their household budgets.
Yeah, it also. It creates unrealistic expectations too, because like 7 years ago, if I had to wait, like if I got something 2 days, it'd be like, that's incredible, that's ridiculous. Now I expect it because I've had it for so long.
Exactly. And as businesses kind of grow in size too, it creates a moat where they're able to keep out smaller competitors. Because if two stupid guys trade stocks decided to open up our own e-commerce company, do you think we could deliver products in that amount of time? Absolutely not.
I'm pretty dedicated. I'd make it happen.
Exactly. Yeah, Doe's gonna work 48 hours a day.
Yep.
Yeah, but it also, like I said, it becomes a competitive advantage to a certain degree. And JD is also kind of moving on the forefront of robotic delivery. That was their publicity stunt during the coronavirus. Is they actually used a drone to deliver supplies to a hospital in Wuhan. So that was it was
you know what? I saw that. I didn't know that it was them at the time. That's cool. I didn't. Okay, that's pretty cool.
Yeah, they have they're building or built the world's first drone airport for delivery services.
All right.
Yeah, I mean, when you watch like futuristic movies where there's like just like packages flying all around, that is like the world that JD is trying to create.
So they're creating Skynet? Is what you're saying?
Yeah, I'm pretty sure that's the real name of this corporation.
We all know how that turns out. So
I have no idea.
Whoa, Skynet is?
I've never seen that movie.
Terminator. Oh my gosh.
No, I'm joking. So once again, we're using this margin of safety calculator. Most recent earnings per share for JD were $4.83. So I was saying how the earnings per share growth rate was kind of like off the charts, like not really usable because of the 2018 down year. So I used 27%, which is their top line revenue growth, which I think is much more reasonable. It's still a big number, don't get me wrong, but I think that's a more reasonable estimate for their earnings per share growth. Future PE, hair come a little bit, so I put them at 20. It's a little bit of a larger expansion than they are right now. I think they're around 16.8 or something like that in terms of PE. So it's a little bit of expansion, but still below what Amazon targets, which is reasonable. I think you're always going to see a Chinese tech stock discount, and then you're looking at this 15% rate of return, which is still a pretty aggressive number above market. That gives us a margin of safety price for JD of about $130 a share, which is quite a bit above where they are today. They're only at $80 a share as of when we're filming this. That's a pretty sizable discount based on like the future growth there.
Especially because it's the margin of safety, not the top line.
Yeah, exactly. That's not what the true value is. This is what you're getting the company for below market by a fair amount there. I just want to say thank you to the person that's recommended this video. JD is definitely interesting opportunity in terms of the market goes. I don't know. I'm fully invested right now, so it's like I don't have any capital free to buy anything else. But
I'll buy some.
You think you buy some?
Margin.
Yeah. Oh, yeah. I know, right? Like I said, I bought some Baba a couple weeks ago, so that's really where my Chinese tech stock play is right now. Because look at market share, Alibaba is about 50% of the market. JD, I want to say, is about 15%. So they are number two, but they lag behind quite a bit. The reason being is that JD is sources the products and sells the products directly, whereas Alibaba does that, but they also have a kind of a more of a Amazon marketplace kind of vibe where they allow people to set up stores on there and then sell products through their website. So
they also have consumer to consumer as well. They also have like an eBay type deal as well.
Yeah, they're they compete in the same space, but they have different processes on how to get there. But the thing to me about JD that's most impressive is by far and away is their logistics network. That'd be hard to replicate. Alibaba has kind of outsourced and partnered with other companies to have their logistics, whereas JD has brought all their stuff in house, and I think that is going to be a competitive advantage going forward.
Yeah, definitely.
All right. Well, thanks for tuning in. We'll see you guys in the next one.
Thank you.